So we have at this point covered the every aspect of the order flow. We talked about the market participants, and we also talked about the two most popular order flow tools, being obviously cumulative volume delta and the footprint chart. So now it's time to put these things together with a price action. Therefore, you won't be using one against each other. It's a good practice to kind of start connecting these things immediately. And to be fair, I know a lot of people who are only using these two concepts. They are kind of over any sort of profiles and stuff, and they just trade a simple price action with confluence from the order flow. So if this is something that sounds interesting to you, I just wanted to let you know that there is the way of doing things. But obviously, right after this, we are jumping into auction market theory. So I have a bunch of examples here where we are going to just talk about the confluence between order flow tools and the price action. So the first things first, this is a classic failed swing on a failure of the footprint chart with a buying on top. You can see it here on your y-axis delta as well. Why I picked this one is because when you will go into higher time frames, this is a 30-minute chart, you won't be seeing very often these kind of a delta divergences and these things that I covered in smaller when it came to the small rotations. Your volume distributions will be much more equal, but if you will zoom in onto this chart, what you might see is that as kind of market was trying to break this level on some sort of a tick charts, there was a massive buying here, even buying here when it started pulling back, and only that then sellers kind of stepped in and moved this lower. If you are using a higher time frames like 30-minute or 60-minute, this will get all kind of meshed up into the one candle, and as you can see in this example, there is a large selling here in the downside. It's kind of this thing here. So this is why your delta is negative for the candle. Obviously, it's not by much, but it's still a negative. But so you need to be a little bit more forgiving when it comes to these things. If you are trading the higher time frames, once again you have these kind of a 3 drives higher. As you have a 1, 2, and third drive. Market will then kind of make this pause, makes a inefficient move to the upside, fails at the high and sells off. So this is a perfectly fine trade, but when it comes to the footprint, you still see the buying at the top, but you won't get it as clean as if this would be a 1 minute or 5 minute chart. Okay. Example of a cluster. This is without any kind of a volume profile and points of control and stuff like this. Market is making this kind of a base right here, which from it moves to the upside after the V-shape reversal. So you have another factor of confluence. It hit this Quasimodo level and moved to the upside. Before the move, it also took out these kind of lows, so there is no signs of any sort of strong compression. All the business here was kind of done, and this is pretty inefficient bottoming structure. We left this small liquidity gap, and once markets fills it, you can see that previous example happened here. So this is the rotation to the downside. There is a large kind of a climatic selling. Once again, pretty inefficient move after this sort of a sideways movement. Market will quickly come to the level on a huge selling, but then selling all of a sudden kind of stops, which you can see in your deltas here. But inside this zone, there is a large sell imbalance. So market orders try to sell into this level, but they got stuck. You can see how the candle essentially looks. No, you can see there is a rejection candle, but all your selling, this like dominant side of selling is happening here. So this is a good confluence for your cluster trade, and once again market will then sharply move to the upside. This is the Quasimodo pattern, and the order flow action is happening inside this part. Okay, it's not the retest of the level, but it's the bottoming structure. This is what I think is a more important, is that once market breaks this level of support, once again you have a huge selling. You have minus 1200 delta, minus 719 delta. Look at where the aggressive selling is happening. It's happening below the level, yet market just breaks back into the level, and your QM pattern is basically formed. Once it's going to retest right here, it moves to the upside. What is interesting here is that as it moves to the upside, it leaves this sort of a compression here, and once there is this climatic buying, climatic move to the upside, market just runs out of the steam, and then it will flush and cascade below these longs that were building inside this move. But this doesn't change the fact that this QM, this over and under pattern with this sort of structure inside here is more than a valid trade for you to take. After we will get to the videos where I talk about each setup in detail. You would be already out from this trade anyway. Here you will be taking profit inside these prior resistance levels, so this is a different kind of thing, but doesn't change the fact how valid this trade was. Okay, this is something I already showed you. You have a compression. Once again, these higher lows are building. Market is building this kind of a pattern, where everyone is just anticipating the breakout to the upside, but you have a cluster sitting right here. Market will make this inefficient thin move to it. There is not really a buying at the top, although the delta is highly positive. The point of control is stuck at the upside, and you can see all these buyers basically were just chasing it for the breakout. So you might not want to fade it right away, but once it's just start to fail, this is not the worst fade. This is a tricky trade, obviously, because it makes this sort of a V-shaped reversal when it hits the upside, but going long before any kind of compression like this, where you just have these kind of unfinished or not traded low, is always a dangerous thing. So if anything, after such a huge buying, because you can see how big this candle, the delta of this candle is compared to basically anything else to the left. Even if I wouldn't be sure about shorting this, I wouldn't get long, at least, because there are these lows right here. So this is a complicated trade, but because obviously you kind of have a signal to go long as well, but it's once market is trading below all these buyers, you have to understand that they are deeply underwater. So any sort of selling they will just start to flushing their positions, and it will because all these buyers then start to closing out their trades. You have a lot of stop loss resting below these lows, and it will result into this huge flush down basically. Okay, so this is a tricky one, but once again where order flow could be actually helpful. This is another example of a cluster trade, and this is the one where I mentioned that kind of a unfinished structure at the low. Okay, you have a obviously pretty obvious level of the cluster. Market basically paused and make this massive move to the upside, you know, shifting the structure of, you know, clearly breaking this resistance, you know, once again on a quite a bit of a inefficient move. So you can expect the reaction once if we're going to revisit this. But you can see this double bottom here. Okay, this is, if you want to buy this level blind, you can, but I would at least put my stop into here. And even here, you know, there is another kind of a cluster which was around this V shape. Okay, so which we essentially traded. Even if I can draw this level, mark out this candle, we basically downtick into it. So this is one of those cases where you need to be more aware of what is below you. Okay, it's not as simple as, you know, drawing a rectangle and kind of slapping your order there, because you have this clean, you know, unfinished kind of a poor low here. So, and as you can see, market trades it, you know, a lot of selling coming into it. These can be both stops or aggressive sellers trying to push it. It's unable to do it, makes this kind of a lower time frame. This would be, once again, on lower time frames, this would be seen as a QM, because obviously if support is broken, we kind of reclaimed it and you will test it before the move higher. Okay, so this is another thing. What is important here is looking below yourself, what is going on there. Okay, simple setup, you know, compression at the lows, so market is likely to revisit this. Quite a bit of efficient move here, you know, market is just going back and forth, then it will start to become inefficient, you know, sharp move into the cluster which was already traded. So when this happens, I obviously this was a level that gave the reaction previously. When market is going into this for a second time, I want to see this previous high to get taken. Okay, I'm not going to place a limit blindly here. I want this to get traded and failed at it. Okay, so you can see it here, large amounts of buying in the bottom part of the candle mostly, but, you know, overall large delta. Market hits it and then immediately reverse it into these lows, where once again pick up in selling in here, small bounce, and then one more leg down before up. Okay, but this is the example. Where we were. Okay, next one. This is also a little bit of a complicated chart, because these lows are far from perfect for me. Okay, you can see that although there was just a tiny bit of a kind of a stop run here, you know, where we traded below this level of support before we moved up, there are still these kind of higher lows that can get traded. So when it comes to setups like this, I don't like to trade these blindly. I like to just wait how market will behave once it hits the level. And as you can see, you know, we hit the level, sellers really try to kind of push it. You know, you can see it on your y-axis profile as well, and but then, you know, just buying will essentially overcome it. And this is, you know, you have these your kind of limit orders sitting at these levels, so aggressive selling into them, market is not moving anyway, and once it starts to, you know, turn its hands, obviously this candle is very telling. If you take a look at how it looks, you know, large wick to the upside, all the selling happening down here, the POC is also here, so this is a nice candle to then jump into the trade, and you can see how market reacted from there. Okay, some of the intraday examples. This is intraday chart for BTC. I didn't mark anything here, so let's take a look. You have to the downside, obviously, things that you are want to be looking at are these kind of large flushes of delta. Okay, you can see how much selling came into these lows, although the market is indeed went down, it's immediately starting to turn up. Okay, so these are the things you want to be looking at. You have slight delta divergence here, although this delta is a little bit lower. There was some pickup on buying around these areas. You know, the CVD is pretty much equal, although price is much lower. Okay, so obviously the market orders would, you know, get flushed into. There is this little bit of absorption coming into these lows. You know, you can see market makes a higher low, delta is making a lower low here, so this is where you will get these small pullbacks. Obviously all these things like this are, you know, suspicious. You know, these huge pickups in delta, you want to see immediate kind of continuation, which is not happening, and market is just kind of flushing, you know, above this high. This is your kind of a failed swing. You know, people will chase it, take out the highs, delta is, you know, huge into it, but market will just continue to go to the opposite direction. Okay, so this is this thing. Another one for BTC on a intraday levels. I should have marked this one a little bit better. There is a sign of a exhaustion here. Okay, lower low, delta is not responding to that, and then we make this kind of a inefficient move to the upside. There is your cluster, and once we kind of come into it, you know, you can just start getting from there. You can see how much more granular the lower time frame price action is, how it's kind of a trickier to see these things clearly. Okay, so that's one of the things you need to pay attention to. Large buying into the highs, markets then make another high, which is not even, you know, the buyers were not even trying that much, but then once we retest this QM level, you have once again pickups in delta, which are good fading opportunities. You know, you can see this is not a CVD divergence, but you can see these candles, you know, this large buy candles right into this yellow level, and market is not going anywhere, and it's just kind of going to flush lower. Okay, so for this example, what do we have here? The failed swing, delta is more of a flat, but these things start to change pretty quickly once we if you didn't get in here, then you just want to kind of watch what is happening around these levels, and you can see the highest pickup in delta, which is represented in more buying than anything before, is on a retest of this kind of a small cluster, you know, where market stopped and then sold off from there. So even if you take a look at this as a simple SR, when you see this amount of buying into something like this after this key high was taken, then obviously this is a good short. So here is this kind of a trend following type of scenario that I mentioned, where market reached some point where it failed from, and then on a pullbacks you have this immediate buying action, which, you know, is coming without any sort of follow through. So this is the one. Another example, you can see there are also the colored candles here. These are based on delta and volume. These are bonds, but the same thing. You make a little bit of a cluster here. Market makes a higher high from it, breaks the SR level. You get a pullback. Where is your delta? You know, it's much lower than it was here, and you know, they will just take it up from there. Another one, once again, a level of compression, which is this line right here. Market fails at the high. This is a little bit hard one to execute, but then you get this kind of a price pause around here. This is really a small cluster, but what is important to once again notice is this. Okay, you can see how much buying basically went into it without any sort of follow through, and once this starts to fail, then you can obviously see how big of a flush happens from there. So this one, and then this is the one last example for the video. Once again, this really gets taken out by the tick. This is one of those examples where I talked about that although your kind of a cluster or start of this inefficient move is happening here, where obviously this is your this inefficient candle which started the move and broke out basically at this level. Look how these lows are looking. Okay, so these are higher lows sitting here. Market just comes into them, takes this one out by the tick. You get some finished auctions here. When you have these strings of zeros above each other or below each other, it means that stops are usually getting triggered. Okay, but once again you start pushing back. You can see where how much selling happened here, where your POC is, and this is just moving higher from here. Okay, so this is once again important to not only blindly drawing the rectangles on the chart, but also looking at the structures that are below you and have this kind of a order flow confluence that will give you the signal to jump into the trade, and that shows you that the selling is most likely done for that, and you will get a nice bounce from there. Okay, so these were some of the examples. I hope you can see that we are not doing anything extremely difficult. Sorry. It's really just picking up the solid levels of price action, and then using a footprint chart and cumulative volume delta as your factors of confluence. Looking where people get stuck, on the retest, looking how market is behaving, looking at your structures, and so on and so forth. Okay, so this was it for a order flow and price action, and now let's jump into the auction market theory.